Hi everyone, JJ here with The Art of Value. Welcome. Well, today we've got Tesla news. We're going to look at the share price movements lately. We're going to look at the new Model 3. It's finally out. What are the changes? And we're going to look at the price cuts to the cars and to FSD. That surprised a lot of people. What's it going to do to the margins? What's it going to do to the company and the share price? We're going to look at some different opinions and what's going on there. We've got a lot to cover, so let's get into it. Okay, so let's have a look at the recent Tesla share price. We can see here that the last day before Labor weekend, it was down 5.06%, so quite a big drop there on the Friday, and we'll get into why that might be. If we go back 5 days to that week, it's up just marginally at 0.88%. Now, if we go back to the past month, it's down 3.49%, so not really having a great month there, pretty flat really. And for the past 6 months, we can see it's up 26.42%, so pretty good for the last 6 months really. And 126.65 year to date, so pretty stellar performance there for the year to date. Couldn't complain about that, even though recently it's been down. But minus 10.72 for the past year, so not having a great past year, really down on the year so far. But of course, zooming out, if we go back 5 years, it's up 1,296%. So you won't find many stocks that are up that much over that long of a time. And of course, all time, pulling way back, we can see that it's up 19,041% going way back. And it's pretty crazy stock price chart there if you look at it. It's pretty amazing to see every time I see it. It's pretty incredible. Look at that takeoff from late 2019. And one of the most interesting ones to me is this one, how much it's down since that peak in early November 2021. It's down nearly 40% since then still. So it's going to be interesting to see when we get to early November 2023 where the share price is then. Will it still be down a lot by then? That's 2 years. That's a long time for it to be pretty much going down. It's had ups and downs since then, of course, but keeping in mind that it did get to a peak. It's my opinion that it was a bubble. I said so leading up to that, and it really hasn't recovered from that. And I'm sticking by that. It was a bubble. There was a bubble. If you look at the ARK stocks, emerging tech, and the EV bubble, so many stocks are down since then. EV stocks, people said Tesla was different, and it is different. I think it's a great company, but nevertheless, still down from that peak in 2021. How long will it take to recover? Getting back to that. It has spent years going sideways in the past. Will it do that again? If we look at the dot-com bubble, it took a long time for some of those stocks to get back there. But is Tesla different? We'll have to wait and see. It's going to be interesting at the 2-year mark anyway from that peak. So, of course, the big news last week, well, some of the big news was Project Highland is finally here. The Model 3, the new Model 3 has arrived, updated. We'll go through some of the changes quickly, briefly. But Tesla did a press event for this, which is pretty unusual for Tesla. They do quite big events, of course, where they invite people along. But this is unusual to have a press event like this. And it is a form of promotion, not advertising, but is definitely a form of promotion. So Tesla's changing a little bit like that as time goes by. So for the exterior changes, we have new colors, ultra red and stealth gray. We have new fascia, headlights, tail lights. And the interesting thing about the tail lights is there that it's now in one piece, which makes it cheaper to build, to construct. When you lift the boot, the whole light comes up rather than being split. So that's getting rid of more parts, as Elon keeps talking about with the car construction. We have Tesla word mark on the back, and we have new wheel designs. On the interior, we have a new dash. We have interior LED lighting, strip lighting, which you can see in the photos. We have no stalks, and the horn is in the center of the wheel, so getting rid of more parts there. We have ventilated front seats, perforated rear seats, improved material quality, 30% improvement in wind and ambient noise, 25% improvement in impact noise, 20% improvement in road noise. We have a new, brighter, more responsive screen with a slimmer bezel, an upgraded ventilation system, and a improved split climate control. 17 speakers from 14 before. That's quite a lot of speakers, isn't it? Rear screen added for the kids in the back watching movies, playing games, that sort of thing, including climate control settings. In general, as we can see from the photos, that it does seem a bit more sporty than before. Maybe that's to do with the years that have gone by since the update, where things seem a bit more sporty when new models come out. We can see from the photos the differences really from the exterior, and one main important point there is getting rid of some parts. Elon's talking about always getting rid of parts, making it easier to manufacture when they can bring costs down. Better technology but fewer parts is the general trend. Thanks to Rob at Tesla Daily for that list. He's did an extensive video of all the changes, so go and see that if you haven't seen that already, if you want to go more into the details of all the changes there. So the next big news were price cuts for Model S and Model X and for FSD, full self-driving. They've cut the price of that, so let's get into that a little bit. So basically for a Model 3 now, you can get it for just over $53,000 US, and for a Model S not plaid, you can get it for just under $75,000. And for a Model S plaid, you can get one for just under $90,000. So for the S and X base prices, they've decreased 15 to 19% for those base models, which is pretty substantial. Notably, the Model X will now be eligible for the $7,500 US federal tax credit because it sneaks in under that $80,000 mark. And now to the FSD price cut, and I think this is a reason that the stock price went down along with those other price cuts as well. Investors generally don't like to see price cuts, even though there's a debate and argument about the grand plan that Elon has here. Generally, investors in the stock market don't like to see their companies' prices going down because it means lower margins in general. So I think that's, as far as Wall Street's concerned, the big concern here. And the price went down from 15,000 to 12,000. So that's a 20% price cut. Elon will be hoping, probably most likely, to get a bigger uptake now that the software's more advanced, hoping to get it more out there. Cutting the price makes it more affordable because it is expensive. There's no doubt about that. This is an expensive product, an expensive service to pay $15,000 for this when it can't actually drive everywhere by itself. You can't make money from it yet. So it's really for wealthy people to have this assisted driving. It's not like after you pay that $15,000 that you can displace the time with doing something else in the car yet. That's the future of FSD, hopefully, that the car will drive itself and you'll be able to be more productive in the car, do something else completely, or even sleep, whatever. But you can't do that now, so it is definitely an expensive add-on, an expensive option just for the fun of it and to beta test. Lowering the price will get it out to more people, I would say. The other thing, of course, is interest rates, which have gone up substantially. And so these prices coming down will help with that. It makes things more expensive to buy, especially if you've got paying interest rates on a car loan or whatever. So bringing those prices down helps with that. It maybe you could say that it's probably on average not that cheaper because of interest rates for a lot of people. For investors, prices going down of a company was supposedly with a moat. Bringing prices down is usually not a good thing unless it's a low-cost producer. If we think of Amazon or Costco cutting prices, cost savings, and then passing them back to the customer, and therefore they'd buy more products and the flywheel, so to speak. It's a cliched thing, but the flywheel went on, and that was kind of hidden for Amazon. A lot of investors didn't see that. Could this be the same with Tesla, where the innovation's actually increasing and costs are coming down? And so if they want to get to 20 million cars around the world, this is a way to do it. But for investors to see margins slip from where they were, they did slip last quarter. Are they going to slip again? So maybe this will not be good for the Tesla share price unless a lot more investors believe that that's what's happening. There are kind of two camps, two schools of thought here, whether it's a bad thing. We've seen Jim Chanos talk about on Twitter, which I'll look at soon, saying that's a bad thing. How can it be a good thing? He's saying, and he's been short Tesla for a long time. And then we see Chamath, who came out with a tweet the other day saying how great it is, and we'll look at that too. Now, if you're getting value out of this episode, so if I do think about subscribing or following if you're not already, to get more of these kind of Tesla updates in the future. So let's look at what Chamath said the other day. He's out there in the arena tweeting. A lot of people are annoyed at him because of the SPAC king, where a lot of retail investors lost a great deal of money and he made from it. And he said, trust the process and all that. Is he being a big promoter? So we'll take this with a grain of salt, what he says about things, but it's interesting nonetheless. So what he said was, after seeing this chart about the Model S and the Model X prices going down incrementally, he said in this tweet, I was shocked when I saw this chart. The speed and aggressiveness with which Tesla is cutting prices is the way to beat the end boss. Rapidly increasing price affordability times constantly improving hardware and software equals super maximized market demand. This is a lethal combination which we haven't seen play out in any modern market before. Some companies cut prices, but most keep prices flat or increase them. Some companies improve products quickly, but no one has actually given you more for less on such a big ticket purchase so frequently. So that's an interesting thesis, saying that Tesla, it's different this time. We haven't seen it before, cutting prices. So he's basically saying forget about the margins for now. They're going for a massive volume and cutting prices while increasing innovation. All of those things at one time equals super maximized market demand. So it's basically saying that Tesla is going for a huge moat, almost a monopoly in the auto industry, rapidly increasing price affordability, so cutting prices as they have been, and constantly improving hardware and software at the same time. So the technology gets better, but prices go down, equals super maximized market demand. We'll have to see it's the case. They're going to go for 20 million cars per year around the world. So in that case, margins don't matter that much for the time being. In the long term, they could put prices up again when they have such demand and such a good product that it won't matter so much what's happening with margins right now, even if they go down. Elon has said he doesn't care so much about margins. He'd rather cut those just to get more products out there. And on the other hand, and it is good to look at the other hand all the time, we have Wall Street Cynic on Twitter, or X here, who is Jim Chanos, famous short seller Jim Chanos, who famously uncovered Enron or helped to do that, and many others along the way. He's been short Tesla for a long time, lost a lot of money, no doubt, but I think he's still short, probably not as much. He says, if, as the faithful believe, Tesla is a software company and not a car company, then a 25% cut in software gross profit margin, assuming 80% GM is 15,000, should give pause. It won't, of course, he says. He's constantly said that Tesla bulls are delusional. Maybe he has made money on the short since it's come off the peak on the way down. So for Tesla news that comes out, he's always pointing out that it's actually not a good thing. So he's saying there that if we're to believe that Tesla is not just an auto company, it's a technology company, then we focus on the software, and robo-taxis are in the future there. If FSD is such a big thing, cutting prices isn't a good thing because it'll hurt margins. So we'll have to see what happens. It is going to be interesting to see the results in the next quarter. There'll be a lot of eyes on what's happening to margins in the next couple of quarters, given these big price cuts to the software. A lot of people do think FSD is going to be the thing. We're running robo-taxis, so FSD will be worth a lot more than the price paid for it. But as I said, it's not at the moment because it's really just, you're just playing with it. You're not able to make money from it. But if there were robo-taxis, like Uber's running around by themselves with no driver, then money could be made from it. But it's really not like that at the moment. You're paying as an early adopter to have an expensive product, but now lowering the cost, maybe getting out to more people. Now, if you're watching on YouTube, I'm going to put a link here to my growing playlist of Tesla videos, which I've made before. Go and have a look there if you haven't already. I'll put some in the description as well for people watching or listening elsewhere. And thanks for watching or listening this time, and I'll see you in the next one.